Good morning, guys. We're going to look at the major currencies now, and first I'm looking at dollar Swiss. Now obviously dollar Swiss had not a great day yesterday, but it gave us a chance to get long of it just around here. So it's rebounded, which is great. It's come off of its severe overbought area, and we're just seeing a convergence of those indicators with the RSI also popping higher. I'm looking at 93.56 to these recent highs of 93.75. If you look at where the trend line is today, you can see that's coming in 93.88. So if dollar Swiss does get up to these higher levels, obviously we want to take our profits and look again. Now this should be supported then down at 93.56, or if not at the 9-day moving average, which is coming in at 92.67. So just hold on to the longs, wait and see. I do see dollar strength, as I've said, and nothing so far has made me change my mind, so let's just stick with it, eh? Now we'll take a look at dollar CAD. And dollar CAD, bless it, it really has been undermined, I think. Obviously when you're seeing the rise in oil prices, it makes the CAD get stronger. So you need to look at oil when you're trading dollar CAD, because oil goes higher, dollar CAD goes lower. It's really that simple, but not a lot of people know that. So it's below currently both of its short-term moving averages. 9-day coming in at 126.21, the 21-day coming in at 126.31. So here you're going to have resistance. On the other hand, here you're going to have support at 127.69. So shorts should be covered down towards here, and we see what happens if we get down below that. If we look at the longer term scenario with dollar CAD, you can see really that it can go quite a bit lower. There you go. So there is a chance we could test the 2017 2018 lows if we carry on with this path. Now obviously the market isn't looking that oversold, considering, okay, so there is a chance for this to go quite a bit lower if we take this area out. Remember what I said, you're watching these two moving averages on the top side. Stay below there, jobs are good. Now we're going to take a look at dollar yen. Well, what can you say about dollar yen? It's just up and away. Need to take out this, obviously. That's 109.23. Today we've been to 109.16. So here is the obvious place for this market to go. Looking at 109, first 109.69, and then this one at 109.85. Watch this. Okay, we haven't been able to take this out. We've spent most of last year trading lower. This year we've started to trade higher. That shows yen weakness, dollar yen strength. Watch the stock markets with this pair, because it does tend to follow suit as it was. But apart from that, there's not really much else I can say about dollar yen. So what I'm going to do is going to take a look at the Aussie. No real change in the Aussie. We could be making a large topping pattern in the Aussie, but obviously it's not played out yet. So narrow ranges in this one. Keep your eyes on it, because if it is a top that is playing out, you're looking at it coming back down towards this 200-day moving average, and towards obviously this fib level down just above there. Okay, remember it's just above there at 73.69. Our 200-day moving average is at 73.28. So to be a topping pattern, they don't take long to form, to be fair. Not as long as basing patterns, you know, but you're getting market sentiment changing, and that's what you need for a turn. You need the market to actually change its view, and its view was the Aussie higher. Look at that Aussie Kiwi. That will also, I'll look at that in a minute. I'll look at Kiwi first. Now the Kiwi is showing the same sort of symptoms, if you like, as the Aussie. However, you've seen this sideways movement for ages. So this, if you look at this also, you've seen the move down, 2-day up, move down, dead cat bounce, held that 21-day moving average perfectly, and that's coming in today at 72.41. Okay, so we've been to 72.32, so it does look like the Kiwi is going to be under pressure. You know that this is a continuation pattern. You can tell this is a dead cat bounce. Awful word. Sadly, that's all I can describe it at. So I always look to the Aussie Kiwi for, well, it's just one of them markets I really like. And there is nothing in this at the minute that's telling me Aussie Kiwi has done enough. Now, if you look at this, you're looking at 107.96 as a resistance area. You're also looking at this area here, 108.20 to 108.27. All right, so we get through that here. We're going to go up to here and possibly challenge this area here, which, if it does, say this is construed as a double top. So if we get up towards here, normally doubles hold, triples really do. So that's going to pose a problem for sellers up at that area. And still, to this day, that doubles hold, triples rarely do, is ignored. So please don't ignore it, because it is a viable, good chart pattern, and it's a viable, good piece of advice because it works. So, you know, I've rarely seen triple tops hold, rarely. So that's why I'm of that opinion. Doubles hold, triples rarely do. So if you keep that piece of good advice, I don't think you'll go far wrong. Okay, good luck. I'll catch you all later.